let me know when it's live.
You're ready to go, my man.
Okay, perfect. Well, thanks for everybody joining. Lines are on mute. The chat log is open, so any questions you have, go through the presentation. Please feel free to engage either Josh Campbell or myself, Dave Dickey, and we'll be sure to address your question before we end the call. And those of you that are with us that are not already part of our Mortgage Advocate Accreditation Program, say that 3 times really fast, then please check out the latest and greatest, and we have a screen up here for you right now that gives you some of the highlights and benefits, but of course the rate advisory and alert service is part of that. But as those of you on the call that are part of that program know, it's been very helpful in allowing you a way to differentiate yourself from the others in the space with consumers. So it's getting lots and lots more traction. Please check out the latest and greatest on the website, either under, when you hit our website, there's on the top bar, there's a page called Lender Services, and that will tell you everything you'd want to know and then some likely. All right, so let's jump right to it. The week ahead, and normally, again, those of you with us know we try to make this short and sweet, and this week actually is a short and sweet week in terms of data being released. Now, most who are in this profession as well, and other competitors in the space have chalked it up as a white week with not much potential volatility. However, don't let the number of economic releases this week lull you into a sleep here, because you're going to need to be very nimble this week, as we have, as you know, if you've been with us, you know that every other week we're going to have Treasury note auctions to contend with and new supply. And really just the theme for those until something changes is essentially where bond prices are today with Treasuries and mortgage backs. But these auctions likely, as you've seen over the last several of these, they likely won't do much to improve pricing from here. They would if prices were elevated. But where they're at, these note auctions really only throw in the risk the rates could go up on us. So you'll have to stay nimble. We do have, of course, the refueling of the recent year. That'll be linger around forever, and so it kind of fades and goes with the general investment public. But as that continues to refuel, you'll see continued support at current pricing. But these bond auctions are certainly a wild card. So let's take a look at what we have. There was nothing for release today, and with a light week in general, take out the note auctions. You want to keep an eye on the stock market and how it's going to do, because it continues to fight. It actually started off today about 40 or 50 points down, and now we're trading 50 points up on the Dow. And so it is and has been for the past week or so in breakout territory. So if it continues this run, it'll certainly put pressure on bonds. But one thing I think that's surprising many experts and traders is that even as the stock market continues to make a run, and it's made about 11% run over the last 30 days, that the demand for bonds still continues to be strong, and the note auctions, the ones this year anyway, have been strong as well. So if that continues to be the case, we will still see mortgage pricing and rates trade in this tight range that we've seen now for a while. So starting off tomorrow, we do get some data points, and tomorrow and Wednesday we'll get some news on housing. So tomorrow we'll start off with the FHFA Housing Price Index, and that'll give us some pricing information. As you can see here, it's projected to be down slightly. Really not much of an impact expected from that. And existing home sales comes out at the same time, projected to be down slightly. Normally, home sales data would not be very impactful to the markets in general, but as you know, it's kind of central to the whole recession sparked it, and so they're looking for signs that housing will lead us out of it. And so they're looking for signs that home sales will be picking up. It's actually projected to be slightly down for existing home sales, and so it can be impactful if it falls outside of that range one way or the other. And then we start, tomorrow starts the note auctions. We get a 2-year note auction tomorrow, 5-year note auction on Wednesday, and a 7-year note auction on Thursday. The 2-year note, normally, as most would say, not projected to be impactful at all, really. But we beg to differ, because the 2-year, if for any reason that 2-year note auction does not go well, that typically that'll send bond traders heading for the hills, in fear that the 5- and 7-year note may not go as well. And as the 2-year goes, it'll typically foretell how that 5- and 7-year note will trade as well. So really watch out. Now most mortgage-backs, most traders of mortgage-backed securities will be keying in that 7-year note, but they'll certainly be watching for the canary in the coal mine here, as we like to say, on Tuesday and Wednesday in the 2-year, 5-year note auction. So you want to stay nimble ahead of those. Again, we don't see that those have the potential to give us much better pricing. The only thing that would do that would be a rollover in the stock market accompanied with a really spike in the fear of the EU debt crisis. These note auctions, when prices are high, have the potential to give you better pricing, but these won't at current price levels. So stay very, very nimble ahead of those. And then on Wednesday, we'll get a pretty important report for the week. Likely the most important, frankly, will be the durable goods order, and it's expected to be up. And I personally expect it to be higher than what analysts have expected to be here, plus 0.5%. If that report comes in strong, that will be negative for bonds, positive for stocks. If for some reason that durable goods order comes in lighter than expected, of course that would be supportive for current pricing. And then we'll get new home sales. We'll get the new home sales. It's supposed to be up, our expectations, plus 1.9%. Again, if that's strong, that'd be negative for bonds. If it's weak, it would be positive for bonds. And Wednesday, of course, the 5-year note auction. Then Thursday, we'll get, first thing in the morning, as we always get on Thursdays, we'll get the weekly jobless claims report. Expected to be basically unchanged here, still high at 450 new claims a week. The extent we start showing a turnaround, that's been pretty stable. So at these levels, when that starts to turn around, we start to see that come in under 400, under 300, and certainly by the time that would get under 250 per week, that would start to have a negative impact on bonds. But even the knee-jerk, the risk here is that the knee-jerk would be bad, negative for bonds if that starts to improve. It doesn't look like there's anything in the cards that would make that worse, but there's always potential, and that, of course, would be supportive for bonds. And then so if Tuesday and Wednesday have gone well for note auctions, you want to stay tuned for Thursday. It would likely mean that Thursday would go well too, since the 7-year is not too far off duration of that 5-year note. But you'll definitely want to stay informed and nimble, and depending on what you have for float, unlock scenarios in your pipeline, you'll definitely want to keep an ear to the street and our alerts for that 7-year note auction on Thursday. Then we get what typically would be a market mover, and we've rated it as potentially high and impactful to the market. It would be at 8:30 on Friday, Q4 GDP, the final revision, expected to come in as the first two have come in at 5.9%, plus 5.9% for Q4. If for any reason that is revised downward, that would be supportive for bonds. It would be negative for stocks, and that potential is there. I don't see it being revised upward much here. If it follows the Q3, it was revised down. So it would have to be revised down pretty significantly. I'd say under that 5% mark. That would be a good thing for bonds. And then, of course, 9:55, University of Michigan Consumer Sentiment Report comes out, expected to come in at 73, which is slightly up from what it was 2 weeks ago. And that, of course, will be that is always impactful to the market's consumer sentiment. And so that's the rundown for the week. Short and sweet. We would tell you that there's the other economic releases and data points. We'll move markets here or there. Nothing that would be super, super impactful. The thing that would be mostly impactful this week would be those Treasury note auctions on Tuesday, Wednesday, Thursday afternoons. And so you'll want to stay nimble and informed ahead of those, as those, more than anything, to move markets along with stock market. Stock market's looking to follow through. If it does, it appears that it wants to. If it does, that would be that would start to poke away here at yields and mortgage bond security prices. Bonds would probably deteriorate a little bit, we would expect. But there's also the chance, and it's lessening so here each day that goes on, especially after today's market action, that the stocks could turn over here a little bit. But so far it doesn't appear to be the case. So with that, that looks like what we have for the week. Josh, I'll check the chat log and see if we have anything, and I don't see anything here. We'll hang out here for a few minutes. If there's any questions about what's coming up this week, please hit us up here. Again, Treasury note auction's high. If all goes well, if all lines up as expected, as these data points are expected to come in, and the Treasury note auctions go well, basically you'll want to watch the stock market. The stock market's going to run here, and it makes a big run as it is today. If this follows through the rest of the week, you can see the 10-year move in the mid-370s, maybe even test 380. But if stocks stall out here, we could certainly get supportive pricing where we're at today. So we don't have, we'll likely be floating. Our suggestion would be likely floating going in through the week here until the market gives us a reason not to. That would either be stock market making a big run or note auctions not going well. All right, with Josh, with that, it looks like nothing in the chat log to address, so we appreciate everybody that's joined. Feel free to, as you've done in the past, call or email or reach out to Josh or I if you have any questions about anything coming up or missed one of our emails on release of one of the data points, and we'll be sure to get back with you. Thanks for joining, everybody. Have a fantastic week.